Remember, the S&P was good for a pretty good chunk of 1%. It's given a lot of that back, if not almost all of it. What do you think's going on, and what do you make of what you heard today?
Well, what I think happened before this meeting is the market had priced in Powell's comments from a couple weeks ago, and he had very clearly stated what he reiterated today, which was we've seen a lack of progress. This is going to take longer than we previously expected. But then what we heard today was it's going to take longer, but we're still going to get there. I'm confident that it's working. Restrictive policy is restrictive enough, and the effects of it are finally being seen. So the calmness that the market has right now, that yields have and that equities have, largely are due to the fact that I think we did start pricing in the possibility of a hike sooner rather than later.
Starting to get worried about that, right?
Absolutely.
Are those fears now gone?
For the time being. I think the other thing that we haven't really talked about yet, he pointed out that he wanted to wait for an entire quarter of data before they really made a statement on inflation. So now, instead of thinking about this on a monthly basis for what the Fed is going to do, I think we have to think about it on a quarterly basis. They want to see trends in the data. So if they're going to get confident to cut or hike, they're going to need to see 3 months at a time of data to feel that way.
Well,
so
I think he was more citing the fact that they've had, you've had the three CPI prints that were hotter than expected, as he termed that, basically a quarter's worth of data, which is why it was concerning. Now, they're also working against the clock and the calendar. Because of the election. They're not going to be phased, he says, by necessarily the time frame of that. They're not going to be political.
Right.
And he made the point yet again, as he has consistently done. But you, as I said to Jeffrey, you do have the feeling that this is just a not yet, not a not at all Fed chair in terms of cuts. I think today that's the case. And I think today that's the right way to put it, because they're just now getting what they wanted. They wanted to see slower growth. If you remember back to the things that he was saying all of last year, at some point we need below trend growth in order to achieve our goal on inflation. So now we got our first quarter of below trend growth, and I think that's a good thing. That's what they want to see. But he did point out that the underlying growth rate is still pretty strong. So if things continue at this pace, all he did today was reiterate, we have no reason to cut yet. And I do think that the bar is very, very high for them to hike. But I am with Gunlock that I'm not as confident as he is that that inflation is going to fall precipitously throughout the rest of the year. Is what you heard today, we'll take a quick break after I ask you this question. Is what you heard today, does that make you more bullish on, let's just say, risk assets, equities, and other things than you were going in because you were fearful that he was going to be more hawkish? It does for the near term, yes, because I think he allowed us a little bit more time to wait in this pause, and markets do well during a pause. Okay.